What's going on, guys? Welcome back to SquireTrades. We are here. It is October 1st. This is the 16th installment of Road to Becoming a Full-Time Trader. And if you haven't tuned in to yesterday's video, I would strongly recommend that you tune in. Here's why. Effectively, exactly what I predicted would happen at some point this week played out today. So just as a quick review, let's go ahead and look at our weekly time frame, and I'll kind of lay out what I was talking about yesterday. So you can see here, we came up on the weekly time frame. We took this external. You could also call this buy side liquidity. When we took that buy side liquidity and that external range liquidity, what else did we do? We reached up an internal where we have this weekly bearish fair value gap, right? And not only did we reach into that bearish fair value gap, you can also see here that we have an inverse fair value gap as well that is also acting as some resistance. So you can see in Q already I'm looking bearish there, but what really did it for me was this right here. So this is called SMT divergence. There was a divergence or difference in these correlating assets being ES and NQ. What happened was ES actually came up and swept its all-time highs, while NQ only came up, swept its most recent external, dug into the bearish fair value gap as well as our inverse fair value gap, and it never actually came up and swept our all-time high buy-side liquidity like ES did here. So that is what we call in ICT terms an SMT, right? So I knew that going into this week, I knew that after yesterday, I knew going into today, I was absolutely, totally ready to get short and see some bearish price action. I want to see this entire weekly chart roll over. I want to see us come down and take this liquidity, and actually we kind of have these relative equal lows here. This did end up sweeping this liquidity technically, but only barely. We've also got more resting liquidity down here. So what I want to start to see play out is this short model. I want to see us just continue this trek down. And here's what's going to happen. On this trek down, what I'm going to do is accumulate a disgusting amount of money from Apex and from my funded futures, and I'm going to save it all up in my LLC's savings account. And what's going to happen is one day, if we ever get down here to this 15,000, my first level will be 17,000 on the money. What I'm going to do is begin my long-term investments. I'm going to get long in pretty much every tech stock you could come up with, NVIDIA, Apple, Meta, Google, all of the basics, right? Get into QQQ, all of these other things that I would like to look at as long-term investments, as well as SPY and all kinds of other things. So what I'm hoping to see is this short model plays out, and going into this last quarter of the year, going into the end of the year, I want to see this play out. And I want to accumulate all of these long positions down here. That's what I'm hoping will happen. If it doesn't happen, boo-hoo, it is what it is. The market doesn't always do what you want it to do or what you hope it does. So, actually, as I was saying earlier, I was praying to see some short action today, some bearish action. And that's exactly what we got. I mean, you can see here that we started this 6 a.m. to 10 a.m. 4-hour candle by moving up. If you're familiar with the power of 3, it states we open, high, low, okay? And that's exactly what happened today. We had our open, we put in our high, we came down and we put in our low, and then we kind of had a little retrace, right? That's exactly what the power of 3 is, and that's how this candle played out right here. As you can see, open, high right here, low down here, and then kind of, retrace back up at the end of this 4-hour candle. And then from 10 a.m. to 2 p.m., we actually continued our drive down. And then from 2 p.m. up until about 24 minutes ago, what happened was we retraced up into this bearish 4-hour fair value gap. So you might be asking, did I take any executions today? The answer to that is absolutely not. The market just left everybody in the dust. Okay? And when I got to the charts this morning, I was thinking, this right here, this fair value gap that was created at 7:30, this had potential. I was considering looking at something like this, entry here, stop here, and just letting this play out. Well, two things happened. One, I wasn't confident in it, so I never set any limits. And two, even if I had set limits, as you can tell, this level here where my limit order would have been set, if you zoom in, it never actually even got hit. So there was no opportunity there. And here's the reason that I was never even considering setting a limit here. Where over here is our most recent swing low that we should be looking at for our market structure shift? Well, right here is your answer. Dang it, sorry. Right here is your answer. There's your market structure shift. But when we had this market structure shift, there was never really an opportunity to get in at all. We kind of came down to it. Actually, well, yeah, I would call this a market structure shift. See, things get weird when you have candles like this that take the high and the low of the previous. Look at this candle. It took the high of this candle and it also took the low. I'll see that it took the low and it also took the high. I would not consider this a swing low because it also took the swing high. So I would still stand by that this is where your market structure shift point should be. And even when we did break through and we did create this market structure shift, I mean, look at this fair value gap. This range is ridiculous. This is a 138 point range, 138 and a half points. That's unbelievable. Now, what I was hoping for was we had 10 a.m. red folder news right here. So this candle closed from 9:45 to 10 o'clock. I was hoping for our 10 o'clock red folder news to, instead of just continuing our move down, I was hoping to get our little retrace into here. And then I could get in on my short setup. I would dig down into the 1 minute time frame, find our entry model, and then get short. That's what I was hoping would happen. Did I get what I wanted? Nope. Is that how the market works? Yep. So now we ask ourselves, where are we at going into the rest of the week? I have a few thoughts. One, we have to be slightly conscious that we are in this bullish fair value gap on the weekly time frame. What I want to see to continue my bearish bias, to kind of confirm my bearish bias, is I want to see the body of this current weekly candle that's forming close beneath this fair value gap. That would confirm that this fair value gap is no longer valid, and then I would like to see us continue down to eventually break this first target. That's what I'm hoping to see. Going into the week, going into the rest of the week, Wednesday, Thursday, Friday, I want to see us get down here and take 19,558. That's what I'm really hoping for. Will that play out this week? I'm not sure. Is that what my bias is? Yes. And here's an important lesson, and it took me a really long time to learn this. You have to be able to adapt to what the market is showing you, okay? So if I came into tomorrow, and let's say London, let's say we do something like this, right? If I wake up tomorrow and London session was very bullish for indices, and we disrespect this fair value gap, if we have a body of a 4-hour candle that closes above this, then my bias is once again going to flip to long. And that's a very important lesson that you guys need to learn, is you can't marry a bias. You need to let the market tell you what to do. I'm not saying be reactive. We should always be proactive, and we should always be knowing what we want to see, right? And I know what I want to see, but I also know what else could play out. And I'm willing to play it both ways, but only if it gives me the confirmation that we are flipping bullish and that we are going to come up here and take some of this liquidity that we have left behind above us. So that's what I'm thinking going into the week. I took an L on Monday. no trades today. We'll see what happens tomorrow. I will be traveling for work, so I will be busy. I have like an hour commute to work tomorrow. We're going to one of our state parks to have a meeting. Um, so I will, if I take any executions tomorrow, there's a very high likelihood chance that I will be taking that execution off of the 15-minute, as I may not be able to give the time and attention to a 1-minute execution. With that being said, it's been Squire Trades. Happy Tuesday. Have a great Wednesday tomorrow. Let's have a good Thursday, good Friday, good end of the week. Have a good weekend. Let's have a good start to this month. Let's have a good month. Let's have a good last quarter. Let's kill it going into the year. We will see you guys tomorrow back for the 17th installment of Road to Becoming a Full-Time Trader. It's been Squire Trades. We'll see you guys tomorrow.